Hello and welcome back to Halftime Report, and it's time for the REIT Connect. And let me welcome on the show today a mall-based REIT, which is Nexus Select Trust, and we have with us Jayan Nayak, who's the CEO of the company. Jayan, always a pleasure to welcome you on CNBC TV 18. Now, my first question, so far, there have been three, office rental REITs. Yours is a differentiated REIT with mall property. Why should an Indian investor invest in a mall-based REIT? What is the potential there?
So, simple answer, Nisha, is that the India consumption story is very strong.
Yes.
And malls are primarily the focal point for consumption. Whether it's new brands coming in, whether it's international brands coming in, whether it is new kinds of categories coming in, malls have been at the forefront. And people are coming again and again. The population also being young, the aspirations are also that much higher. So since the consumption is growing on a steady base, obviously the income that we generate from rentals is also going to go up. As well as the fact that we have got a revenue share arrangement also with almost 80-85% of our retailers.
Yes.
So any upside that we have in terms of sales automatically means that we stand to earn a little more. And that again gets distributed to the consumer coming back or the retailer investor going back.
Yes.
And that's why I think we are a little better off than, let's say, an office REIT in terms of delivering that much more.
So you have a revenue sharing arrangement with the mall lease participants. So tell me about the breakup between the rental growth that you are seeing as a percentage of your revenue and also the kind of revenue sharing proposition that you have, and how is that one growing? What is bringing in more profits for the company?
Both, I guess, primarily because of the fact that the consumption from COVID times has grown by almost 30-35%. So what we did in 2021 or 21-22, we are almost 30-35% higher in terms of consumption today. Because of that, obviously, when we renegotiate with the clients and all that, we are getting almost a 20% leasing upside. So effectively, the rentals have also gone up in the re-leasing spread. And the consumption also going up means that we earn almost a percentage or 2% more in terms of the rentals that or the consumption revenues that we had. That has also helped us increase our NOI. So effectively, last year, we ended with an NOI increase of almost 16%. And a good portion of that came from obviously the releasing spread that we had, plus the fact that we also had the consumption upside that was there.
So that means, Jayan, that every penny that I am spending in a mall for any consumption, a portion of that is going to your, to the owner operator, and if it is under your REIT, it's going to you.
Absolutely. So if you invest and you buy, let's say, Zara from our mall, then every rupee that you spend and you're an investor with us, a part of it is coming back to you as profits for your re-spending in anything that you'd like.
All right. So that's the basis of the kind of consumption story it builds along with the property story that it has. But, COVID scenario was an aberration. Jayan, from there, how much have you picked up? Compare it with the pre-COVID levels.
So, two factors, I guess. One, not really, as I said, we are almost 30-35% higher than what we were during COVID times. And this is pre-COVID. I'm not talking of COVID. COVID was abnormal.
Yes, pre-COVID levels.
So when our pre-COVID levels were, let's say, 2019, then we are almost 30-35% up in terms of consumption. And in terms of the trading occupancy, we at Nexus have reached almost 98% trading occupancy. So both sides, that had all gone down a little bit. We are down almost to 90-91% during COVID times. Now we're back at 98%. So that both these are big factors contributing to not just the growth, like we said, but in terms of increasing the efficacy also for the consumers to come back to us again and again.
How is the growth potential? Would you be looking at more acquisitions for increasing your portfolio? And how is the construction development of standalone developers also taking place in the country, especially considering that the real estate prices are going up? So how do you see the potential of newer construction and therefore your growth?
We, Nisha, have been acquiring almost 1.5 million square feet every year. So we started in 2016 with 1 million and now we're 10 million square feet. And our stated goal is to go on increasing our acquisitions on the same path. So I don't think there will be any slowdown as far as that we are concerned. Both in terms of number of malls, today we are 17, we hope to be 30 in the next 3 to 5 years. There is enough grade A malls available for us to acquire in the present scenario.
Yes.
And besides that also, the growth of construction both in tier 1 and tier 2 towns have really picked up. More developers are now investing money in real estate, primarily because of 2 reasons. And when you do a mixed use and you have a mall right up front, let's say a residential locality, not only does your residential locality get a premium because of the real estate coming in, but the fact that the mall itself can earn you more money in valuation by selling to people like us as soon as it is built. So
Yes.
that again is, I think, something that is an assurance to developers which developers did not have in the past.
Yes. So they are also getting assured
they're-
about, monetizing the
Monetizing
assets
their
that
assets
they are
that they are having,
building.
yeah, so.
But Jayan, there are lots of retail investors who are watching this interview. So what are the questions that retail investors ask generally, and what are the benefits that come to them by way of a REIT investment, and especially a mall-based REIT investment? Has the traction increased from retail participants?
Very much so. So, give you a figure, we had only 20,000 retail investors when we were listed. But today that figure has already reached 36,000. So, effectively, we are growing as we speak. General question is only about the fact that whether we are delivering what we have promised in our DRHP or not. And we have beaten the projections so far. So, that's the only question that is there. The other question that they'd still ask, and that I think is a question where we can, the media can also help us, is when will we be listed on the indices? So then that entire trading will be much more easier, that much more visible for the retail investors. So I think we as an IRA also, with our association also, are trying to ensure that we get
So
listed
there
on
are
the
2
indices.
ways of benefiting in this. One is the dividend payout, which you spelt out,
Correct.
the growth potential, and by the revenue sharing model as well as the rental income model. And on the other hand, it's the upside of the equity that will increase with the traction. And finally, few benefits that a REIT has versus a pure play stock listed, which is a mall operator.
So I guess number one is the fact that you are getting assured dividends on a quarterly basis.
Yes.
Which is your first benefit that is there. The second benefit that you are getting out of it is that as in when you want to monetize with the consumption growing, with the portfolio growing,
Yes.
it gives almost an equal return in terms of equity to you as a stock would give you.
Yes.
So I think you are benefited on both sides, both regular income as well as the future upside in terms
And
of
the tax benefits also.
as well as the tax benefit, because the dividends,
Yes.
like are there in REIT, are almost 66% of the dividend is tax free.
Yes.
Which is also an added advantage to any retail investor.
All right, Jayan, you've made some emphatic points on why a retail investor should look at REITs as an investment as part of their diversified portfolio. Thank you so much, Jayan, for joining us.
Thank you very much for having us.
Thank
Nisha.
you. With that, we'll slip into a short breather. It's a wrap on REIT Connect.